Ladies and gentlemen of the crypto space, we're live at 11:29 a.m. on a Tuesday, March 16th. Lots going on. The markets are absolutely volatile. Dow Jones down 113, Nasdaq up 146. What does this even mean? It's just such a perverted market at this point. You got to realize that people are supposed to get their stimulus checks, but they can't, and if because the banks can't take the money. There's too much money. Uh, they printed too much money. Printed. It's not even printing. It's a shell game of the disturbing nature, and it's a farce. You got to watch Stephen Van Meter. Quite technical, but it's worthwhile to attempt to digest. Um, Simply, if the banks take on this money, they literally get penalized for lending, and lending is velocity, and without velocity, you have a collapsing economy. And that's exactly why what we're talking about that's occurring, that's growing in the crypto space, whether I mean, there's no way, shape, or form what's occurring in the crypto space can can sustain an economy. But what's fascinating from a technological perspective is the fact that such systems have emerged that perform the same functionality as legacy banking infrastructure, and the capacity to access equity and borrow. Whereas with legacy banking infrastructure, you have to apply for a loan and you get a credit score, and they do an underwriting and checks and financial analysis, and whether they're willing to take on the risk of the debt, of the under collateralized debt. Whereas in the crypto space, it's permissionless, run by algorithms. Aave will lend you money. They lend you money based on availability of liquidity. If they have the capital, based on the amount of capital they have and the amount of total outstanding that's borrowed, they will lend to you at a particular rate. If this amount borrowed increases and starts to approach the total amount of liquidity they have, these rates will go up to automatically balance the system. And I've seen it several times thus far that the rates go very high to prevent lending, to discourage lending. Who the heck's who's going to borrow true USD at 82% a year? Come on. And you can see that exactly why that's occurring. The amount of available capital they have is basically all lent out. And that's the way Aave works. Today's topic, equity access drives monetary velocity. So what we're seeing is basically systemic failure in the legacy financial system. And the Fed, I don't even know what they're going to do at this point. They think they have it under control, and anyone who thinks they have it under control is lying to themselves. It's just not possible to control because there's too many people, too many persons, too many opinions, too many motives, and it's too big. It's too big and too much momentum. People want to borrow. Can they borrow? That affects psychology, emotions, and either substantiates momentum or just deters it. People get demotivated, demoralized. You know, you want to run a business and you need to borrow 100 grand, and the bank says no. That's fucking depressing. Meanwhile, you could literally take, if you have 200 grand, you could go onto Aave and you could borrow 50 grand in 5 seconds. Literally 5 seconds, no questions asked. No questions asked. You're going to pay 12.76% for USDC. All right, if you expect that 50 grand is going to sustain a business that's making 200 grand a year, you're making 400% on your 50 grand borrow. That you're paying 12 points, so you're making 387.24%. Permissionless, no questions asked. You have the capital, they'll let you borrow. Over collateralized, which means the lenders are protected. This is the fix. This stuff works. There's no risk with regard to lending because all the debt is over collateralized. In the case of a shortfall, of a collateral shortfall, if you're using Ethereum, or if you're borrowing dollars and you use that to leverage Ethereum, and Ethereum goes to $10,000, if you have a collateral shortfall, your position's liquidated to maintain the over collateralization requirement, to protect the lenders, to protect the system. The whole system is designed to protect itself. The legacy financial system has nothing to protect itself. And the Fed can't protect it. That's crazy. They don't have any control whatsoever. Oh, I didn't even, I had the wrong screen up. I didn't show you. I'm sorry, guys. I got the title in. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto, non-custodial DeFi, or nothing at all. Let's pop it over to the main screen and see who's in the stream. Charlie G is in the house. Wave is in the house. Stimmies for buying crypto. Yeah. Well, Stephen Van Meter points out very nicely that the stimulus can cause a systemic event unto itself. So stimming, it's not as simple as that. And there's no such thing as free money. Stimulus is going to cause a lot of problems, guys. And you got to keep your eyes peeled because it's not just as simple as buying high and selling low. Selling high and buying low. It's not as simple as that because the better you understand the macro landscape, the better prepared you'll be to sell at a higher point. You'll never get the top. Some people get it. It's like hitting a hole in one on a golf course. But the point is, if you could protect yourself, protect the downside, now you're talking about being an intelligent investor, an intelligent value allocator. So you got to understand the macro landscape a little bit. So when you see Stimmy, better look on CNBC and see what the market's doing. You better follow the macro value allocators, Stephen Van Beater. Brent Johnson posts a lot of good commentary. Sven's always fun to watch. He's waiting for the system to fall apart. But there's also opportunity to the upside until the system falls apart. So there's no reason not to capitalize on that. Chet's in the house, always a pleasure. Squan Chi, yes. Trevor's in the house. What whale bots wrongly causing BTC fall? Well, right now it's under pressure of the 50 SMA and the 4-hour. If it gets above that 50 SMA, that's pretty cool. It got rejected, as you can see here. A couple hours ago. Here's what it is. Ethereum looks much healthier. Ethereum's currently sitting on the 200 EMA on the hourly. I believe it's on the 50. No, it's still below the 50 SMA on the 4-hour. That's the next hurdle. But we do have a nice smiley face pattern, inverse head and shoulders. So if it could get above basically so on the 4-hour it's the 50 SMA above, but here's the 50 SMA, the 200 SMA, and the 100 SMA that's right above. If it could get up here, man, this is some serious bullishness. All it needs to do is go to a little over $1,800. I mean, you're talking about $30. Rips $30 to the upside, and that's some serious bullishness engaged. Well, looks bullish from the Stoke. Stoke could easily rip to 100 and pop us up 30, 40, $50. RSI is in a healthy position for a significant upswing if that's what's in the cards, if that's what investors say. The whole point of these charts is that the oscillators give us a sense of prevailing market sentiment. This gives us a sense of what people are thinking. There's a good chance there's an upswing. And the price will do what market actors want to do. And we'll see it in the data. We'll be able to understand what they're thinking. This gives us a little keyhole into the brains of 100,000 market participants. Chat says, hit the like button. 26 people in the stream, 13 likes. We can do better. Lewis is in the house. On Twitter and social media platforms, people are flipping out. The correction in crypto is healthy if you understand Noah theory. Mitigate risk by staking, collateralize, and velocity. Well, frankly, honestly, I'm actually risk on at the moment. Pure Bitcoin, pure Ethereum, and I actually leveraged Ethereum. I leveraged a little bit of Ethereum, not too much. Small leverage. Take a little risk. It's been a little bloody of a couple of a week or two. Alts were really on fire about 2 weeks ago, and then they took a fat dip. Took about 15% of the portfolio. And then yesterday, with this dip down, everyone's going to get fearful. So everyone's pulling out. But now, for me, the trend formation, there's a good chance that it stays within trend. And to me, that's enough to put a little bit of risk on. And that all has to do with your risk appetite. So clearly, you could be risk on in a dollar protective fashion, which is exactly what we talk about with an Ethereum USDC pairing. That's going to have exposure to Ethereum, but it's going to be more dollar stable. You're exchanging your volatility for, a return on investment, a yield percentage. Now, bear in mind, these yields are obviously often double-digit percentage, which changes everything if you have enough capital. You're plugging in 200 grand into an Ethereum USDC pool at 20%, an extra 40 grand a year. If Ethereum goes up, great. If Ethereum goes down, all right, you're still making 40 grand a year off the yield of the pool. So that's it's food for thought. And the whole point of this stream is to give you guys your options: risk on, risk off, yield, um, protect your dollar value, protect your asset quantity with a Bancor position. It all depends on what you want to do and how comfortable you are with taking risk. It's all about risk. What value allocators, what real investors do, they're not buying assets, they're managing their risk, either taking more risk or taking less risk. And that's how it works. Let's keep it going. Brad Stewart's in the house. Frank, always a pleasure. Borrow much lower interest rates at that. No, not necessarily. I mean, these are big rates. You get personal loans probably still for like 7, 8, 9%. That's dollars, and they're under collateralized. Banking system is literally designed to screw itself under collateralized debt. These boys were out of their minds. Crazy. Brad says Wunamic has some interesting context to the BTC sell-off. He is on point. That is some serious data analysis. I follow him closely. Carlos, welcome. Charlie G, please give the stream a thumbs up. It's not hard. I like that, Charlie G. Candid, I'm back. Welcome. Noah, can you please give us your opinion on how Aave yields will be on stablecoins after the bull run ends? Still 10%. They'll probably be down. In a bearish market, it'll probably be less borrowers. You know what? It flips. In a bear market, people are going to be borrowing Ethereum because then they borrow the Ethereum and then they sell it for dollars, which is a short position. Then he could buy back the same Ethereum for less dollars as the price of Ethereum goes down. So that's how you profit on the downside. And this is obviously DeFi. You could do all this stuff on centralized exchanges. It's a short position. You could do it on DYDX, and you could do stuff in a variety of different ways using half L2 solutions or full L2 solutions. Or you could just do it in DeFi and pay enormous gas fees. It depends on what you want to do. And for me, I pretty much play DeFi at the moment. I buy, I sell, I borrow, and it's $100, $200 a transaction. And for me, that's still at my comfort level. If I keep losing money, probably end up taking a couple of well thought out positions on like DYDX, save on the gas fees. I don't really want to go around spending those kind of gas fees for too much longer. Unless the market shoots up and I double the portfolio, then who gives a shit? Just saying, just saying. Frank, you inadvertently drew a smiley face in your TA. No, I vertently drew a smiley face in my TA. That is a smiley face. It's an inverse head and shoulders. Bloop, bloop, bloop. So this is generally a bullish trend formation, but it doesn't always play out like that. You look for a break to the upside. This is a bullish trend formation if it breaks to the upside through these long-term moving averages. So now, this looked like an inverse head and shoulders, but it broke down. So there was no confirmation. If it broke to the upside of the 50 SMA, this is 1 inch. That would have been pretty much a confirmation. But it was invalidated with the break to the downside. This looks real. This looks ready to explode, in my opinion. One of my larger non-Bitcoin Ethereum positions, aside from Ren, but Ren I bought for nothing, and it just keeps on going. Otherwise, just for the fun of it, what else do I have? The large positions are Curve, but that's locked up. Curve I can't touch. Curve is like Ren. That's locked up in VE Curve. I can't sell it for 4 years. I like that because it keeps going up. 1 inch is liquidatable, but this chart looks ready to rip to the upside. This is I don't think it's there's a lot of people that have questions about the distribution of tokens for the asset. For me, you look on Santiment, you look at token distribution charts, it looks quite normal. And the liquidity emissions that they did really distributed a lot of tokens to smaller holders. And that's good. That's healthy for the ecosystem. Um, there's a lot of people staking. The yields have gone down. I would imagine transactions are higher than ever. You could look at transactions on the DEX tracker, but it's still throwing around 19.71%, which is pretty cool. I've seen this higher. Like if 1 inch doubles in price, this will double in yield. You'll get 40% on your dollar or on your assets. 1 inch is still number 3. I mean, Uniswap just dominant. I don't know why people are using Uniswap. That makes no sense to me. 1 inch goes through Uniswap, and Uniswap you're paying full gas price. On 1 inch you could use cheat. Cheat, you're paying a fraction of the gas price. It just doesn't make any sense to me why Uniswap is used as much as it is. Because if you trade on 1 inch, you're using Uniswap for a fraction of the gas price. There's just no logic. And Sushi, they're moving ahead. They're controlled by FTX at this point. I'm not too much of a fan of their monetary policy, but I like what they're doing cross chain. This is all going cross chain. Where's Bancor? There you go. That thing's moved up nicely. And 0x with their Maca aggregator. That's the user interface is absolutely breathtaking. So that's why they're doing so hot. Let's keep it going. I want to get to LinkSwap. I'll show you guys Digibyte and equity access. This whole start of the stream today, it's about equity access and monetary velocity. That's really all that is. And to understand why you want to put a Digibyte on Ethereum, it's that. It's access your equity. You got value just sitting there doing nothing. It's doing nothing. It's going up and down in value. And that really doesn't do anything. You can't even protect it. You own a Digibyte position, you can't even protect it. You can't even protect it. You're literally just longing a position, and I'm not a fan of naked longing, really, unless there's significant confluence in the chart suggesting imminent appreciation. You're above the long-term moving averages, for instance, or you're talking about the macro assets. You're talking about Bitcoin or Ethereum. So I play the vast majority of the long position with Bitcoin and Ethereum. And depending on how I feel, sometimes, I mean, look at this. This is quite nervous about this. I don't like that it's under trend. I mean, is it really under trend? I don't know. Did I draw it great? I don't know. No one knows how well it's drawn, but you got a couple of touch points in there. But look at that Stoke. We're talking about the 4-hour here. And look at that rounding bottom on the MACD. This could easily blast through this 50 SMA on the 4-hour. So, long the Bitcoin, long the corn. Did Noah just say he's risk on? Yeah, Charlie. A little bit of risk on right now. I feel good. It is what it is. We'll see what happens. I feel comfortable with the amount of risk I'm taking. It's Bitcoin. Get the stimmy checks. When the market collapses inevitably in 2, 3, 4 weeks, whatever, and then you'll see it. You'll see it, the risk off. You'll see the risk off event. And then everyone would have hoped that they had a moderately risk protected position. And they wish they weren't as risk on as they were. And before you know it, it's too late. So the appropriate thing to do is wait for a fat rip to the upside. You take your Ethereum, and instead of just holding Ethereum, you throw it in an Ethereum USDC pool, and then you protect your dollar valuation, because that's what the Ethereum USDC pool will do. So risk on, wait for the rip to the upside. If this rips, well, this is Bitcoin, but if this rips to like 2,500, $3,000, you get a good rip out of Ethereum. Then instead of selling Ethereum for dollars, you put it in an Ethereum USD pool and the USDC, and you're going to have a dollar protected valuation, which is very nice. Let's keep it going. Charlie's taking them screenshots. Barry DGB, what's up? Candid, will you ever sell Bitcoin? So I go in and out of Bitcoin sometimes. I have a portion of Bitcoin that's completely isolated. Keep it in CFI. No intention of touching that. Too much of a pain in the ass to figure out how to transfer assets outside of the DeFi space. It's too easy in DeFi. It's point and click, and that's why like $100, $200, $300 transactions I don't really blink at. All right, fine. $300 transactions I do blink a little bit. It's too easy. It's click, 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 permissionless. Click, 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 permissionless. I don't have to log in with credentials to a centralized exchange and figure stupid screens and wait for the centralized exchange to send me assets, Bitcoin that takes an hour. No, I want to do something. It takes 15 seconds with a very expensive Ethereum transaction. I'm done. Keep going. Joe says, freaking love DigiBuy. DigiBuy's wonderful. Nothing not to love about it except its price action. That's the only thing not to love about it. Um, as I've said time and time again, for an asset that you think is going to go 10x, 100x on the money, small position of the portfolio. You don't want it to be a large position. If let's say someone had 100 grand and they're throwing around like 10, 15, 20 grand on like 3, 4, 5 altcoins, that's what you want. And you want 80 grand in like Bitcoin and Ethereum, and then you got to figure out the balance that's reasonable. To me, that's the most reasonable and logical portfolio construction. Vast majority belong in the macro assets, and everyone could hope. Folks could hope all they want. There's nothing disrupting Bitcoin and Ethereum. They have all the network effect. And that's it's neither a good nor a bad thing. It just is what it is. Why would you want it any other way? Ethereum is going to evolve extremely fast. And if you're worried about gas fees, you go on Loopring, you go on Diversify, you use limit orders. You go to 1inch and you press limit. Here, watch this. Look, whole bunch of Bitcoin. I could trade it to USDC. No gas. No fee, no fees, no gas, no slippage. It's a limit order. There's nothing. It doesn't cost anything. And then bear in mind, someone actually has to take the transaction and pay the gas fees. But limit order, you go to Maca. Maca has limit orders also. Where you go to Keeper DAO. Limit, limit, limit. Bancor is going to implement the Keeper DAO limit order system. All right, so I don't have the correct pair selected. But the point is there's a limit order system there. Keeper DAO's limit order system. Stop complaining about Ethereum gas fees and start transacting on Ethereum for free. If one more BSC Binance Smart Chain person complains about gas fees and they've never done a limit order or they've never used Loopring or Diversify, I don't know. Literally, they have no idea what they're doing. And they're taking immense risk transferring value into a centralized platform that they don't know if they could get their value out of. There's no guarantee. It's a risk. Why would you take risk allocating value to assets just to take more risk to do that on a platform that you don't have a guarantee that you could get your value out of? You're taking unnecessary risk. And that's just strange. Brad says, thoughts on L2 tokens aside from REN? I thought you said you didn't put value on them in previous stream. Well, I don't have any value assigned to Loopring at this point, but bear in mind, I assign a lot of value to L2 platforms. Doesn't mean you could buy an asset and that asset is going to respect or reflect the potential value of the platform. The value of the platform is its contribution to the ecosystem. The value of the Loopring asset isn't really relevant to the value of Loopring to the ecosystem. One would hope it is, but that's kind of like the relationship between an equity and a company. There's a separation, a degree of separation there, if you understand what I'm saying. REN's a little different, particularly because it's required to create a dark node. So they kind of tied the asset to the value of the system, the contribution of the platform to the DeFi space. Brilliant. They're very, very intelligent what they did there. There is no degrees of separation between the valuation of REN and the success of REN VM because they tied them together technologically. Chat DGB will top 10 in the future. I'm kind of I don't think that anymore. The top 10 are going to be monetary velocity assets. I mean, look at Uniswap at number 8 already. I mean, I could go down the list of the top 100 and tell you what's going to be the top 10 easy. The fact that Binance coin is up, this is all about monetary velocity, ladies and gentlemen. Even Cardano, literally, that's speculative monetary velocity because there literally is nothing. There is no monetary velocity. They're literally just speculating that there's going to be monetary velocity. Monetary velocity drives everything. Why? Because it triggers emotions. It triggers opportunity, or at least excitement of opportunity. Because if you could borrow money and you could long or short an asset, you can make or protect money. That's a way to say it. So Uniswap's right up there. I don't know. You can't really do anything with XRP. You'll be able to access it from a decentralized in a DeFi way once Flare comes online. There's no relationship whatsoever between Flare and XRP. I'm not quite sure where Flare tied its launch from a social media perspective to XRP. I don't know whether that was a good thing or a bad thing. But look at all the this is what it's all about. Equity. It's all about equity, and this is where DigiByte comes in, and I'll get to that right now because I'll wrap up the stream in a couple minutes. It's all about equity. Got $22 billion worth of equity. And if you scroll down, I'll find DigiByte here. I think it's on page 2 actually at this point. Nope. $851 million worth of equity. That's everything. That's what's driving this whole DeFi thing. That's what's driving this behavior, these interest rates, these yields. I could lend dollars and get 1,000% compared to what a bank offers me because people want to borrow because they see opportunity to grow and create value. And this process of lending and borrowing creates value, drives monetary velocity, and sustains a functional economy. So there's a digital economy that has been born in the last 1 year. I'm going to pull this up, but let's, if anyone has any comments, checking. Mustafa, what do you think about Chiliz and StakeNet? StakeNet is cool. It hasn't received the attention it should. BlockNet has received much deserved attention. But StakeNet is in a similar position to BlockNet, but BlockNet has more infrastructure, and BlockNet and Avalanche, and so there's a whole lot going on. And I think speculatively, there's a lot of UTXO assets that haven't gotten attention that really deserve attention. I don't know much about Chiliz. It's got a lot of attention. It has obviously great potential, but who's going to buy something up hundreds of percent? I don't have any interest in that. My interest is monetary velocity. I want to own financial infrastructure. I want 20%. I want platform transaction fees. I want to earn transaction fees from Curve. I want to earn transaction fees from 1inch. I want stuff like that. I want to be the bank. I don't want to just buy an asset and hope it goes up or down. I want to literally do what the banks do. The banks lend money and get interest. That's all I want to do. I should put that on my resume as the job that I want. I want to be the bank. Carlos did a multi-chain swap the other day. Pretty amazing stuff. Yeah, right. It's seamless. It'll get better. It'll get smoother. At one point you won't even know what chain you're operating on. But multi-chain from Andre, that's where he's heading. I mean, look, Ethereum the Phantom. Boom, 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 boom. Ethereum the Phantom. And they operate in the same addresses. So you literally just have your Ethereum wallet and then you change your network type. Boop. Ethereum network and Phantom. So you just change your network and bam, you're on another network. So at some point, this will all be seamless and you won't even know what network you're operating on. James, do you have any opinions on proof of work versus proof of stake? Yeah, well, proof of work is that's an entire conversation unto itself. You know, the energy consumption versus proof of stake, and how you ensure the integrity of the system. Because proof of stake, the attack vector is to buy as much as you can, and to gain control of the. I mean, in theory, even with a proof of stake network, you could gain control of the network the same way you would with a proof of work network. with a 51%. If you have the vast majority of assets, you will gain control. Now, that's the whole logic behind like critical mass and Ethereum and even Litecoin having having almost all of the script hash power. So it's a hash dominant, as they say. Um, that's the protection. And so that means the macro assets have the momentum, and they have the network effect to achieve basically once they scale globally, global scale security using the fundamentals of blockchain tech that were introduced by Satoshi. Distributed ledger technology facilitated by proof of work and proof of stake has its analogous reasons it provides security. There's a lot of commonalities at the conceptual level. Charlie G, how much of all is filtering into Bitcoin? I don't think much. I think profits, but this is equity access. People are using Bitcoin to borrow money to make profit in the DeFi space, and it flows back to Bitcoin. All right, so I mean, Digibyte simply has its Ren bridge now. You go to LinkSwap, boop, 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 bridges, you hit Digibyte. This is a standard warning for Ren and how it works. Digibytes can actually be a quick mint. I've minted a lot of Bitcoin onto Ethereum. It takes a good hour for the confirmations. This is going to be really quick. This could be like a minute for a mint for like 30, a couple minutes maybe. That's it. You literally, you don't, there's nothing to do. You literally go here, you go to bridge, you click Digibyte, you take the warning, you click mint. It's going to give you a Digibyte address. You send however much Digibyte you want, and obviously, here, let me show you one more thing. Disconnect, disconnect, disconnect. All right, so when you go to LinkSwap, you connect your MetaMask, which is an Ethereum address. You select MetaMask, boom, it connects you to MetaMask. And now when you send your Digibyte here, there's gonna be two transactions, one for the transmission of Digibyte and then for the minting of the renDGB, and you'll get your Digibyte here in your MetaMask wallet. That's it. There's nothing else. It's as simple as that, ladies and gentlemen. But there's nothing to do with it right now. You could add it to maybe I think there's a Digibyte Ethereum pool they added to LinkSwap, which is cool. And you'll get transaction fees, but there's really no velocity driving much of the Ethereum Digibyte transactions. Why exchange? You could do Digibyte however anyone has historically done Digibyte on centralized exchanges. And the power comes from equity access. Well, you don't have renDGB on Aave, but you have WBTC, and renBTC is instantaneously swappable for WBTC. But if you go on MakerDAO, you can work with renBTC directly. So if you get renDGB listed on MakerDAO, you can use it to mint DAI. And now you got 100 grand with the Digibyte, you could borrow 25 grand worth of DAI, and then you could do stuff. And that's your leverage, and that's the way it works. That's the way it works, boys and girls. Equity access, that's what drives monetary velocity. So right now in the legacy financial system, banks are being completely restrained from lending. They don't want to take the risk. But here in the DeFi space, the risk has been alleviated vis-a-vis over collateralization. There's no risk. Thus, no restriction or inhibition to lending. So there's no inhibition to monetary velocity and growth and value creation. Brad said, think so recently the finance sector is 1/3 of the US GDP. This is why I'm fascinated by these financial networks as well. 1/3 of GDP is actually that speaks horribly to the US financial system, that the financial sector that contributes absolutely nothing meaningful to society, doesn't produce a damn thing, So a third of all our GDP has no production, no tangible value to it, no making an asset, no making an item, no making an appliance, no producing food and all that stuff that goes into what people actually need to live. It's just churning financials. So that speaks horribly to the state of the U.S. financial system. Um, but it also means there's financial opportunity, and what's most important about DeFi really is this is a test net, and it's proving that one, you can create alternative financial systems. Two, they iterate substantially faster than the legacy financial system even can't even think to try and do. And three, there's monetary policies being tested. That's just obvious. You have monetary policies when you see inflation, deflation. You have monetary velocity when you see lending and borrowing. This is all very obvious to me. Not even just anecdotally. I mean, empirically at this point. How functional they are, how secure they are, and sustainable they are. Only time will tell. But these systems are here, and they work. And Aave releasing this today was a big deal. You can now take USDC and Ethereum. So you could have an Ethereum USDC position, which is a dollar protected position. Let's say you got 50 grand worth of Ethereum and USDC. You could put it in here, and that means you're gaining interest from the Uniswap Ethereum USDC liquidity pool, 50 grand, and you could borrow USDC. I mean, in theory, you could just have USDC. 50 grand with USDC, you borrow 20 grand, you put it into the Ethereum USDC pool, you could put the Ethereum USDC LP token back in here, and then you could borrow more money, and that's how you gain leverage, and that's what the centralized platforms do. And now we could do it in the DeFi space, and you could leverage. And that's how you take on additional risk. There's no reason you can't do that, though. Name of the game. Charlie G says, people attack that thumbs up button. 38 people in the stream, 24 likes. We can do better. Ryan Palmer, what's your opinion about DeFi within corporations such as Acro and their future market for sure? Well, Acro and countless other protocols are DeFi automation. And the captain of DeFi automation really is Yearn. Yearn automates all of this stuff that I just talked about. That's literally what they do. They put the borrowing and the lending, and then you take the borrowing and you buy Ethereum and you put it back into Aave and you get leverage. And Yearn does that all in smart contract form. You could do it manually, but that's what Yearn does. That's what Alpha Pool does. Alpha is really cool. Never had the patience to really sit in a position, but that's what these farm pools do. You could get they'll do it for you, 2.5x leverage. If you scroll down, you'll see the pools that I look at. I look at really just Ethereum USDC and DAI as well. But look, you can leverage 73% if you want. Or what they're going to do is they're going to take your capital and they're going to put it in as collateral and borrow against it, and take that capital and put it in as collateral and borrow against it to leverage additional yield. So what Uniswap is pumping out 35%. Here's the breakdown. It'll load. There you go. So the breakdown is at 1 point here, 2.5x. At 2.5x, Uniswap will be paying you 87%. You'll get another 28% in alpha incentivized yield. It's their alpha asset. You'll be paying 41% interest because it's leveraged for a total APY of 74%. Problem is, that's very risky. Because you could easily experience a collateral shortfall, and then you get margin called, and you get liquidated, and that's the name of the game. So if anything, what I would do here is probably 1.5x, which is really nice. Instead of 35%, you get a 52% with a little bit of alpha incentivized yield. Your borrowing cost, 13%, and it's probably borrowing from Aave, 13%, 12.8% on USDC. So that kind of makes sense. And your total APY of 48% on Ethereum USDC position. That's right here. This is DeFi automation. It's the same thing what I just did with Aave, where you have your asset, dollars or USDC, you borrow, you put it back into Aave, and then you can borrow some more. And that's how you gain the leverage. Is alpha leverage curve 3-pool relatively safe? Well, relatively safe is something only a person can subjectively assess. So if it was 3-pool, I'd rather go for Yearn. So I'm not a fan really of too much tether exposure. I mean, it's been a lot of the FUD has been pushed out of the way in good part, but something just throws me off about it. I don't want to take the risk. I'm very risk adverse. But 3-pool, you go here. I would probably do instead of 3. There's no V2 3-pool yet, but you could do 30% on Ethereum, 80% on YFI. Still, that's holding up pretty incredibly. But and you can get 44% on GUSD pool. So you go over the curve, you throw your dollars into GUSD pool, and you take those LP tokens and you can bring them over here for 44% auto compounding. So curve gives you the emissions. Curve gives you liquid incentivized emissions, which Yearn auto compounds for you, producing 40 something percent, 40.17% on your dollars. Changes everything. Yearn automates that DeFi process. Instead of APR, you get APY. Yeah, BNT, Miss Hacker, 321. BNT is another story. BNT transfers risk to the monetary policy, which the monetary policy handles with inflation to produce the impermanent loss protection and has a deflationary component, the vortex, to balance off the inflationary pressure. The inflationary pressure is going to make your long position whole, account for the impermanence loss, but it's going to also put a debasing pressure on the value of BNT as more become in circulation. And the burn component is a deflationary pressure to compensate for the inflationary pressure, which produces an increase in price of BNT over time. Now, bear in mind, these are all in the Sen system. So even Banco, we don't even know what's going to play. The odds are it could have a huge amount of inflation and you still have significant price appreciation. I mean, look at Doge. That thing is inflated through the ears. It's somehow it spikes like it does in price with the quantity of assets out there. Crazy sauce. I don't know anything about Reef really. It's interesting because Reef is going to probably operate on Plasm, and Plasm is a big deal on Polkadot. Plasm is one of the few lock drops I did. I didn't really do much on Polkadot, and I can't stand Polkadot assets on Ethereum. That drives me nuts. If you're gonna have a Polkadot asset, you can have a substrate blockchain. You can have a substrate asset. You can have a real Polkadot asset. So this was last year that I was talking about that subject. This year, if you're operating on Polkadot, you better have a Polkadot asset. Stop throwing these stupid Ethereum assets to represent a yet to be functional Polkadot system. That always drove me nuts. Anyway, ladies and gentlemen, I'm going to wrap it up. What do we got? 12:13 p.m. on a Tuesday, March 16th. It's another day, and I'll see you tomorrow. So early in the week, 37 people in the stream. We got some good likes. I really appreciate that. Tell everyone to subscribe, and I will see you all tomorrow. You have a good one now. Peace.